Hi, we're going to talk about term insurance today, and I want you to understand how you should buy term insurance and what you need to look for, what you need to ask, so that when you go buy term insurance, you know exactly what you're doing. Because if you go to a financial advisor and you ask them for term insurance, they're just going to sell you the cheapest thing they have so that you can give them your money. What I want you to understand is the questions you need to ask a financial advisor are, first of all, how much training do you have in life insurance and what kind of life insurance do you offer? Life insurance is a specialty. I specialize in life insurance. That's all I do. 916-225-1511. Give me a call, send me a text. What I want to do is help you understand how to protect your family the best. And we're only going to talk about life insurance today, but life insurance, or term life insurance today, but life insurance is very important because I don't know if you have heard about the mortality rate in America, but it's still 100%. We buy auto insurance just in case we get in an accident. We buy home insurance just in case we get in an accident. We buy business insurance in case our employees do something stupid and they hurt somebody. And then we get flood insurance in case a flood happens. But when it comes to life insurance, we know with 100% certainty that we will die someday. Whether it's tomorrow, whether it's when we're 90 or 100, we don't know. What we don't want is we don't want our families to suffer if something unexpected happens. So understanding how to buy life insurance properly and not to listen to talking heads like Dave Ramsey and Susie Orman that are telling you not to buy life insurance because it's the worst thing. They're not licensed agents. They're not held accountable at the same rate that I am and other qualified life insurance agents are. They don't have to follow the ethics rules that I have to follow. And I don't need rules to tell me what is ethical and what's not. So having said that, I'm going to show you what we have. This is a term policy. And all right. Bear with me here because, all right, so this is a term policy for a 45-year-old male, okay? Now, this is a 10-year term policy. I want you to understand how the term policies work. When you buy a term policy, you're buying a policy that is only good for that certain term. So if you get a 10-year term, 20, 30-year term, whatever it is, that simply means that when you buy a policy that you have a guarantee of that premium for that period of time. In this case, it's a 10-year term policy for $100,000. Okay, $20 a month, and you don't have to worry about anything else. Okay, $21.08 a month. Now, $100,000 is not enough life insurance, but this is just showing you the example of what a term does. Now, notice at year 11. Notice that at year 11, the premium goes from $253 a year to $1,487 a year. That's because your term ended. These are called renewable term policies. They're all renewable term policies. You can always renew your term policy when it ends for this cost. Okay? So when they say the term policy is cheaper, well, let's find out if it's cheaper. Now, this is a 10-year term policy, and typically when people start their families, they start off with, say, $1 million because, oh, that sounds like a lot of money. And then they're going to pay for 20 years because by the time they retire, their financial advisor says that they don't need insurance anymore because their life has no more value, but it had value while they're working. And so you buy a 20-year term policy at the advice of your advisor, who doesn't know life insurance, by the way. Most of them don't know life insurance. They know investing. So they're going to tell you to buy a 20-year term policy. You're young, you're healthy, and give me the rest of the money because you want to buy term and invest the difference with me, right? Because the financial advisors make their money collecting your money and everyone else's money, okay? They don't make their money selling life insurance except when they do multiple small policies like this. So We have a 20-year term policy, and remember, at the end of 20 years, it increases, right? So let's say that you get a diagnosis that you didn't expect at year 64 or 63, and now you know that you need this life insurance policy and your family wants that $1 million. Well, you're not healthy enough to go get another life insurance policy. As a matter of fact, you're not healthy at all. And so no life insurance company is going to give you life insurance. Life insurance is not something you can just go down to the store and buy. You have to be healthy. It has to be backed up by your health. Now, at this policy, age 20, year 20, age 65, if you need the policy, you have to spend $34,000 the next year to keep this policy in place. So you tell me, is this a good risk for your family? Do you really want to take $1 million away from your family after having it for 20 years and you want to say, oh, by the way, I retire tomorrow, my life insurance ends tomorrow, so I loved you until now, and now I don't really care if you have any money left over if something happens to me. You can get my retirement money, which is all laden in taxes and fees. That's not what I want my clients to do. I want you to understand how term insurance works, and if you have somebody who's telling you buy term and save the difference, you need to not listen to them. You need to find someone like me, a life insurance agent who has experience in training and license, so that I can explain to you how it all works, and then you make an educated decision based on that information. So hopefully this was helpful. And then what I want to talk about now is I want to talk a little bit about if you follow this process where or this concept where you only need life insurance till you're 65, and then you just buy another 10-year term policy because you're still working until you're 70. Well, at age 65, if you buy just a 10-year term policy, you're looking at $10,000 a year. So you go from $1,600 to, or you go from paying, what was it, $2,400 a year to $10,000 a year just to have a term policy in place. So you're going to spend $109,000 in a 10-year period of time just because you're older. Is that really a good use of your money? I don't think it is. Hopefully this was helpful. Let me know if you have any questions. My number is 916-225-1511. Smart Stash Insurance Centers is my company name. You can find me at smartstashinsurance.com. Thanks for listening.